Oil prices moved higher on Thursday as doubts over the fragile two-week US-Iran ceasefire weighed on market sentiment. Investors remain concerned that energy flows through the crucial Strait of Hormuz could continue to face disruptions despite the truce. Now, the uncertainty has kept supply fears alive, pushing crude prices upward even as diplomatic efforts continue.
Oil prices rose on Thursday. Markets were concerned about whether a two-week Middle East ceasefire will hold up and were unsure about energy flows through the Strait of Hormuz. Brent crude futures were up around 3% at roughly $98 a barrel, while US West Texas Intermediate crude also rose by a similar amount to just under $98 a barrel. Both benchmarks fell below $100 per barrel in the previous trading session. That was on optimism the US-Iranian ceasefire would result in the Strait's reopening. But analysts still saw geopolitical risk, and there was no clarity on what US-Iran talks would mean for oil flows. The Strait of Hormuz connects supply from Gulf producers to global markets, and it usually carries about a fifth of global oil and gas supply. Shippers on Wednesday said they needed clarity on terms of the ceasefire before they continued transiting through the Strait of Hormuz. Iranian media reported the country has issued maps to guide ships around mines and show safe paths for passage. Regional oil facilities also stayed under threat. An oil industry source said Iran struck sites in nearby countries after the ceasefire. It included a pipeline in Saudi Arabia, which has been used to bypass the Strait of Hormuz.
And rising oil-linked costs triggered by tensions in West Asia are now rippling through China's manufacturing sector, pushing plastic prices sharply higher. The impact is being felt most acutely in the country's largest plastics trading hub, where businesses are grappling with rising input cost and supply disruptions. Take a look.
This is Zhangmutou, also known as China's Plastic City. Located east of Guangzhou, China's largest plastic trading hub has been feeling the sting of rising oil-linked costs driven by the Iran war. Plastic prices have risen sharply, squeezing margins, disrupting logistics and fueling panic buying across the supply chain. Peng Xin, the general manager of a firm that manufactures plastic pellets, says costs have surged by about 60% since March. He also says his factory's safety stocks have been depleted with new raw materials being bought at elevated market prices. Costs that he says would soon trickle down to customers. Zheng Bin, marketing manager at an online trading and pricing platform for plastic raw materials, said firms have been stocking up in preparation for a longer-lasting Iran war.
With the Middle East situation unlikely to ease in the next 1 or 2 months, panic has driven people to actively stock up. Upstream petrochemical plants without crude oil and feedstock to produce with have also been forced to raise their prices.
The rush to secure supplies has also clogged warehouses and roads. Warehouse owner Han Bing says this year is the busiest year he's ever seen, with daily turnover doubling to about 1,000 tons from around 500 tons previously.
At the peak, after March 5, Zhangmutou was gridlocked for nearly a week. Traffic jams stretched about 6 to 9 miles. Every warehouse was packed to capacity, and both inbound and outbound cargo were heavily affected.
China is the world's largest plastic producer, consumer, and exporter of final plastic products, according to a 2025 report by the Organization for Economic Cooperation and Development.